So we have been doing this series on how these super traders who are doing these mammoth amount of returns around 3 digits, more than 3 digits sometimes, how they find and pick winning stocks again and again and again. So it's through the strategy, the CANSLIM strategy from William O'Neils' book, How to Make Money in Stocks. And we've already done the CAN. Yeah, I think that's about it. And in this video, we are going to study the S, which is the supply and demand, shares outstanding plus big volume demand. So let's begin. So every price you pay, lettuce, eggs, chicken, fish, or beef, it comes down to one rule: supply and demand. And the same thing drives the stock market. No analyst, no theory, no fancy degree beats the basic truth. When demand is greater than supply, prices rise. When supply is greater than demand, prices fall. That's it. The market's entire behavior falls down to this one equation. Now let's look at big supply versus small supply. And let's keep this simple. A stock with billions of shares outstanding needs huge demand even to move a little. But a stock with smaller number of shares can move much faster because it takes less buying pressure to push the price up. That's why smaller supply tend to outperform. They're just easier to move. But, and this is important, they're also much riskier. The same light supply that can help them rise faster can also make them drop as quickly. So pro tip out here is look at the floating supply, not just total shares. If the insiders and management hold a big stake, the shares actually available for trading is smaller. And that often helps performance because when management's invested personally, their goals are aligned with yours. And back the builders, not the bureaucrats. Here's another pattern. Big old companies tend to move slowly. They're run by caretakers. You know, people who are protecting what exists, not creating what's next. Smaller entrepreneurial companies are opposite. They innovate faster, take smart risks, and usually create most of the jobs in the economy. Think of any big names. Let's consider US market, the Microsoft, Cisco, Oracle. Didn't they all start small, scrappy, and hungry? So the lesson here is simple. Back companies led by builders and not caretakers. Look for founder-led or high insider ownership businesses where leadership still has skin in the game. Let's also look at one more point, which is when stock splits go wrong. Now, speaking about stock splits, they always sound exciting, but not all the time. They're not always a good news. A normal 2:1 or 3:2 split is totally fine. But when you start seeing 3:1 or 5:1, that's a red flag according to the book. Why? Because every split increases the number of shares. More supply, which can make it harder for the price to keep rising. Historically, many stocks have peaked right after the second or third big split. So when you're hearing a company announcing multiple splits in quick successions, it could be actually nearing a top. Smart traders even sometimes sell into that hype. Now let's look at another thing, which is companies buying their own stock. And that's a good sign when company starts buying its own shares. A buyback means the management believes in the future. They're literally investing in themselves. A 10% buyback is significant. It reduces supply, boosts earning per share, and can push the price higher. Some of the biggest historical winners saw strong runs after major buybacks. But remember, buybacks only matter if earnings are genuinely growing. A company reducing share count without improving its profits is just playing financial games. Now let's talk about keeping debt low. Here's actually one rule which applies to life as well as investing. Never borrow more than you can repay. The same goes for companies. High debt is fine when times are good, but deadly when interest rates rise or a recession hits. The 2008 crisis was a perfect example. Banks leveraged 40:1, 50:1 and got crushed. So prefer companies with low debt to equity ratios or those that are clearly reducing debt over time. Less debt means more flexibility, and more flexibility means survival in bad markets. Now we have spoken about this again and again, the secret weapon, which is the volume. Now this is where you see the supply and demand in real time, which is the trading volume. When a stock's price falls and volume dries up, that's good. It means sellers are exhausted. When a stock's price rises and volume picks up sharply, that's great. It means institutions are stepping in and demand is rising. During a real breakout, volume should jump above 40 to 50% above normal, and sometimes even double. That's your clue that the big money is flowing in. And that is what powers those strong moves. Always cross-check price and volume together. Low volume moves don't actually last. High volume breakouts do. So again, here's a quick checklist for supply and demand. Favor stocks with smaller share supply. They move faster but manage your risk. The next one is prefer entrepreneurial founder-led companies with insider ownerships. Also be cautious of excessive splits. They often signal peaks. Look for buybacks backed by real earnings growth. Stick with low debt or debt reducing businesses. Watch volume patterns drying up on decline declines and surging on rallies, and buy true breakouts with strong volume spikes confirming the demand. The bottom line out here is supply and demand isn't just an economic theory, it's the heartbeat of the stock market. By paying attention to share supply, insider ownership, buybacks, debt levels, you can actually see which stocks are under real accumulation by big players. And those are the ones that tend to make those major moves. Because at the end of the day, it's not opinions that move prices, it's the demand. Now again, hope you guys like this video. If you guys are new out here, please do like and subscribe so that I can keep giving you all this cool, awesome content which I read from books about the stock markets. And in the CANSLIM series, we've already finished C, A, and N. So please, if you guys haven't watched that already, you can go find that on my channel. I will also post a link in the description. So see you guys in the next one. Hiya!